Now, Citigroup started this year as a titan of American banking, the biggest bank in the United States. It's now the latest institution to be getting rescued by the U.S. taxpayer through the Treasury and the Federal Reserve and the FDIC. Let's get some background on this latest plan. Just been announced from the United States. Our senior business correspondent, Velshi, joins us now. Ali, what is exactly the rescue plan for Citigroup?
Well, listen, this bank went into the weekend a fraction of its former self, the stock having lost 87% this year. It was a bit over $3 going into the weekend, and we needed a deal for this bank, and the bank got it. It will be a direct investment by the U.S. government of $20 billion. That's from the TARP program. That is the $700 billion bailout. Citigroup was one of 9 banks to get money, one of 9 theoretically healthy banks to get money under the program. Just a few weeks ago, it got $25 billion, so another $20 billion. In exchange for this infusion, the government's going to get preferred stock, and it'll have an 8% dividend. So the government's actually going to get a stake in Citigroup as a result. But there's some conditions, Hugh. They'll have to have enhanced executive compensation restrictions and some implementation of a system to redo the mortgages of struggling homeowners, mortgages that are held by Citigroup. This is interesting because specifically, even though Citigroup received the $25 billion previously, it specifically did not apply that to helping people out with respect to mortgages or to sending that money through the system to make mortgages or business loans easier to get. It used the money for acquisitions, and that is thought to be contrary to what Congress had initially asked Citigroup to do. The other provision of this deal, Hugh, is that there will be some federal guarantee against Citigroup's losses. In other words, the federal government will absorb some of Citigroup's losses after a certain amount. We haven't got details yet on what that amount will be, but that could be very expensive. In the end, it puts some liquidity into the company, it puts some capital into the company, and it makes sure that credit continues to flow. There should be good reactions on markets around the world to this deal, but yet again, another infusion of cash to a bank, Hugh.
Indeed, and so part of the deal is that the executives are not going to get any flash bonuses. The American taxpayer now finds itself part owner of the bank. There's also a phrase in here in the official statement saying that there will be this protection against the possibility of unusually large losses on an asset pool of approximately $300 billion. This is linked chiefly to real estate and other assets. So does anyone know at the end of this, what is the American taxpayer promising to Citigroup?
Yeah, that's a good question. We know of the $20 billion cash infusion, but that second part that you just mentioned, protection against unusually large losses, it is unclear at this point what the exposure of the taxpayer is. Now, the lesson we've learned from the $700 billion bailout is that they're going to have to get the necessary approval on this, and I think Congress is going to demand that they know exactly what those assets are and how much the taxpayer is on the hook for. But at the moment, it's unclear how much the U.S. taxpayer, through the U.S. government, is on the hook for to keep Citi alive. Once again, Hugh, the conversation came up about Citigroup that it is too big to fail. Some commentators have said in the United States we suffer from too big to fail-itis, and that's the problem with AIG and Citigroup and General Motors. There are others who are starting to say maybe we should see what happens if one of them failed. But again, those people didn't win out tonight, and Citigroup gets this loan from the U.S. government.